This is Kevin Martin joining you this week with an update from the Lake Erie Regional Grape Program about some fertilizer prices. We are in the middle of harvest, so it might seem like a funny topic. Just to kind of get you updated on where we are in the harvest season, it looks like our harvest is going to run about a week longer, or maybe 10 days longer than it normally does. Things are actually proceeding well. We have better weather than the country on average, and I'm going to talk about that in a second as it relates to fertilizer prices. But what that means for us, just practically speaking, is our loads are getting harvested more quickly. Growers that had bricks accumulation happen fairly early got a little bit ahead. So they've got some unusual free time. Not a ton. They're still busy, but we have been getting questions about fertilizer as growers prepare, at least hopefully, for some fall fertilizer applications. In the rest of the country, things look a little bit different. USDA announced what I think everybody already knew. Corn harvest is well behind. A lot of that is relating to maturity, but also to weather. We're seeing some snow and a lot of rain in parts of the country that are delaying that. In terms of grapes, our fall has been relatively dry for us compared to other years. But what that means directly for us is that this is 2 years in a row where fall applications of fertilizer in other parts of the country are going to be depressed, or at least that's what the market is starting to speculate. Anhydrous, which is most heavily impacted in a negative way on poor fall weather, is down the most. It's down 10% in the last week. It is still up year over year, just slightly. But what that means for us is not a whole lot because we don't use anhydrous. What I would watch is right now urea prices are down 7% for similar reasons, and also because there's some bearish sentiment about crop prices. So that's where growers who do take pre-orders will start to see an advantage over the next 30 to 60 days. What we ran into last fall was that those good prices on urea did sort of go away. With the lack of anhydrous going on, there was some speculation that corn and field crop growers would make up for that with additional urea applications in the spring. So that is something to watch. We did see that last year. MAP, DAP, all of those prices are down in the 2 to 8% range over the last week. And again, for the exact same reason, at least for the most part. We don't use a lot of MAP or DAP. We are, as we see some recommendations coming in when the pH does get good. That doesn't always fix phosphorus problems in our soils, so there is a reason to put some phosphorus down. Ideally speaking, the budget-minded person that I am, I do tend to like superphosphate if you really do have a deficiency. It's about half the price as a MAP or DAP product, but what that does mean is you're not getting any nitrogen with it, and it will mean a special application. So if you get a recommendation of 20 to 40 pounds of phosphorus, it might make more sense to combine it with your nitrogen application, and then you'd be looking at a product like MAP or DAP, and you should probably be pretty sensitive to price because those products are widely used and in higher demand, so they cost a bit more. The big thing for the grape industry, as we all know, at least in terms of cost, are going to be potash and lime. So in terms of potash, those prices are going to be fairly high compared to last year. They're up about 10% from last year. We're seeing lots of concerns in the market. There's a lot of potash available. Inventories are way up. The mines are kind of scrambling. Some of them have shut down for about 8 weeks temporarily to try to work through that demand. It just hasn't at all translated to changes in retail prices yet. So it'd be something I'd watch. I probably wouldn't be in a rush to purchase potassium unless I needed it. I know that a lot of it should and does go on in the fall. A lot of growers are considering split applications of potassium when we recommend really high rates for growers who are deficient. Might be something to consider because you might see a savings in terms of your materials cost just because you do that. If you put some on in the late fall and some on in the early spring, that might be another reason to do a split application above and beyond just trying to make sure you're utilizing it as efficiently as you can. Lime prices are probably going to be up as well. We don't see much movement in lime pricing, but we are seeing with all of our fertilizer increased costs in trucking. and transportation. And that's really what hits lime the hardest. So I don't have any quotes yet. Those are usually more real time, especially as they relate to transportation costs. So as we get into the fall, I would just expect that those prices to be up a couple of dollars a ton over last year, which is the trend we've seen over the last 5 years. We're continuing to see higher trucking prices. So I think we'll continue to see that again. We're already seeing it in the potash market and in the urea market as we move away from wholesale prices to retail prices. The further you get away from those wholesale areas, the higher those prices get in a way that is related to transportation cost and much more severe than it was in prior years. So we will continue to see that trend. Again, I don't think a lot of these prices are extremely meaningful for most of our growers. I've said this in the past. So 10% changes in price are not a concern. They don't change the math for what we should be doing or how we do it, and they really don't impact your bottom line in a significant way. The exception to that is potassium. So you can really save or spend a lot of money depending on how good you are at timing your potassium purchases. So it's at least worth paying attention to. In terms of urea, it's more important to manage your urea uptake efficiently, to minimize your use of urea, and to follow best practices. That's really how you're going to save money with most of your fertilizer applications, because we simply use far less than other commodities because it's a perennial crop. So most of everything we're growing is fruit, and most of what we remove in the fruit is potassium. So, up 7%, down 7%, 10%. These are, I think, meaningful trends to pay attention to. They just will not significantly impact your bottom line except for potassium. So I would try to practice a wait and see approach unless I knew that I needed 600 pounds of potassium this year, and then maybe I'd pre-order half of it, would be my advice at this point. I don't see any significant risk of waiting a couple weeks to do that, though, because, again, we continue to see the wholesale market decline in price and the retail market very stagnant. So that's sort of the big takeaway from this week's update. If you have soil test questions and you need recommendations, our offices are available for that as well. I know not everybody is going to have free time during harvest. It's usually not something we see any interest in until November, but I did want to touch on it since it has been this year, as we see harvest being extended because of the larger crop and loads coming off more quickly because we're getting more tons per acre and the weather being as good as it is. So thank you for joining us this week. If you have any other questions, please let us know. You can comment down below or contact us at our office. Thank you.